Hello, everybody. This is Colin and Stephen with Dollar Cost Awesome. We are in week 12. I'm gonna hide my greasy mustache. Stephen opened last week, so I'm gonna start with my portfolio this week. We'll see where it's at. Okay, so week 12, we should have $2,100 as our cost base. How much money we put in? So I am down about $60 as of week 12. So I put in money just today, so this is a fake increase. So I'm actually down the $60 here, or I guess more than that because the crypto is up $3. Because we didn't do one last week. My buys last week were just Bitcoin and Ethereum. I put $75 in Bitcoin and $25 in Ethereum. And today I didn't quite get my order in, but it should execute tomorrow. I bought 4 shares of REI. So yeah, we've talked a little bit. We've talked about REITs in general before, so I won't go into too much detail. But essentially, if you want to get some exposure in the real estate industry, but don't have the huge down payment to buy a rental property or invest in some commercial property, this is a good way to do it. So REI is listed on the Canadian exchange, and it's one of Canada's biggest REITs. Over the long term, it's done really, really well. There is some volatility in the last little while, especially with the fluxes in interest rates. It's fallen down a little bit from its peak a little while ago, and I think it's gonna fall down some more, but I don't have this in my portfolio here, so I was gonna pick it up. I don't think it's an extremely good buy right now. I don't think it's a terrible buy, but there is room for the downside. But long run, it's a very good hold. It's fairly stable right now at its price. It's got a 3.86% dividend yield, so not mind blowing, but it's because it's consistent. That's pretty decent. So that was my buy this week.
You know what's crazy about that graph? COVID slump is almost halfway through the 5-year window now.
Oh my gosh.
When you look at the 5-year, like the past 5 years, that COVID drop is almost at the midpoint.
Yeah, that's
That is weird.
Yeah. That is weird to think about it. It seemed like, it's still, things are still going on, but yeah, that slump, it's 2 years in the past. March 2020, I think, is when things shut down. So overall, this week, things were doing pretty well. I do want to talk about one thing, and it made news everywhere. The one thing I want to talk about is Netflix, not just from an investing standpoint, but from just like a current event standpoint. For the first time, I think they said in 10 years they've lost subscribers. Now that's partially true, partially untrue. They kind of stopped service in Russia, so I think someone said that $700,000 subs were basically stopped or canceled. So they counted that towards their growth. So although on paper they've lost 200,000 subscribers, they still would have gained in if that Russian thing hadn't happened. That being said, they still had people had crazy targets for subscriber growth. I think they said people were expecting like 2 million, and it was nowhere close to that. So Netflix dropped crazy this week, and $50 billion of the market value went down. I don't know. I don't think anybody was surprised. They've raised their subscription fees aggressively in the last little while, and then there were recent talks of them going after people who shared passwords on their accounts. So not surprising at all, and of course with a lot more competitors in the field growing aggressively in their sub counts. I don't know.
Yeah. I've definitely thought about canceling my Netflix subscription because, I have all of the streaming services and I use it by far the least. So,
Yeah, yeah,
and it's the most expensive too. So,
yeah. It is. Yeah.
well, not quite. Crave with HBO is a little more, but I think, but
Crave.
yeah,
So, okay, yeah. So Crave normally is more expensive. I think a year ago, and this is the first time I've seen this. Was it Black Friday or at some point there was like a annual deal? But you're right. Like normally Crave is more expensive. So I picked that up.
but I watch Crave the most. Like they have HBO, which is probably the content I watch the most.
Yeah,
So
yeah. No, there's really good stuff on Crave. The one complaint is that people complain the Crave app is not that great.
yeah, it's
Um,
not close to as good as Netflix's, but
yeah,
it's come a long way from where it used to be. It used to be real terrible, but like it's usable now. Like
yeah,
when they started, they didn't have subtitles.
yeah,
Like it wouldn't autoplay the next episode. It was a disaster. But so it's like a lot better than it used to be. But
yeah. I remember first getting it like a year or two ago, and like some episodes would not show up. Like Netflix is pretty good when 12 a.m. or whatever.
yeah,
But like I would have to like shut off the app, and then it would freeze sometimes. Yeah, so they've come a long way, but like you said, you can't compare it to Netflix or Disney or any other place because Crave is uh, local to Canada, I believe, right? Crave is just Canada, yeah. So yeah, can't complain too much, but yeah, they hold all the good shows from HBO.
so cancel your Netflix subscription is what you're saying.
I don't want to incur the wrath of Netflix. They're pretty big, even with their 50 billion. I actually wonder what their market cap is. Do you have your Google open?
Not just under 97 billion.
Okay, so this is a lot.
Yeah, it's like 30%, like almost a third of their market cap.
Okay, that's insane. Yeah. I so I thought about picking up more Netflix because I bought a little bit. I forget which week, but I'm like, this seems like one of those falling knife scenarios or catch a falling knife, whatever they call it. It's a falling knife, and I think there's more room to go down and settle before people start forgetting about this whole thing. So I will keep an eye out on it. But yeah, that's basically me at week 12. I'm down a little bit. How did you do at week 12, Steven?
Week 11 and week 12 here. So you can see before my buy last week, I was up $20 overall. Before my buy this week, I was down just about $3. So yeah, so like Colin, my portfolio is definitely down a bit this week as well over the past couple weeks. Yeah, you can see 4 weeks ago, yeah, it was up 71. So yeah, things have definitely gone down a bit since then, kind of across the board. Actually, energy and crypto have both been like pretty decent. But
Mm-hmm.
yeah, they've actually gone down a bit too. But the indices and tech especially has taken a bit of a beating past couple weeks here. But yeah, so the buys for the last 2 weeks here. Um, yeah, so I adjusted down the amount of healthcare in my portfolio weighting was about 5% before, bumped it down to 2.5%. And then I actually moved that 2.5% just into the indices here. And part of the reason for that is I've added a new one here, XEH, which is a European index. So in my indices here, I had a Canadian one, a US one, and an emerging markets one, but I decided to add a European holding here because it gives kind of a different. A lot of the established stocks in the European markets are actually quite heavy in the like consumer goods,
Okay, yeah.
whereas like Canada is much more heavy on like banking and natural resources
Mm-hmm.
and tech a bit, and the US one is super tech heavy. Um, so yeah, so the XEH is a iShares. Yeah, so you can see here, 3% of it is just a different Europe ETF. I think that must be a US traded one. But yeah, so some of their biggest ones are like Nestle.
Ooh.
I don't actually know what these two are. Shell, which is Dutch, I think. AstraZeneca, so it's a little bit of that health exposure there.
Okay.
LVMH is Louis Vuitton, something Hennessy, so it's
Okay.
like a luxury goods powerhouse. They're like one of the biggest fashion companies in the world. So it's pretty diverse. Like consumer goods, oil and gas, pharmaceuticals, Unilever, some tech as well. So yeah, it's quite diverse in terms of the sectors. So I added that. I added some of that last week and this week. So I brought it up to about 5% of my portfolio, and added a little bit of crypto too, just with kind of the like leftover money that I had each week. I topped up the Canadian one a little bit as well, just to bring it a bit more into balance. So we'll see how it goes next week. I'll probably try and bring these both back up to 25% next week. So these will be the two that I buy probably, and then maybe something else too here so that would be based on current prices. That's about 70 something dollars. So we could maybe get a share of the energy one, maybe the tech one. Tech has dropped a lot, so maybe it'll be entering kind of a good buy pattern. But overall, I'm down $13 now. So even since I did my buy earlier today, it dropped another $11 or so here. The indices and tech are definitely down.
So, do you know if the whole world feels the war that's happening in Ukraine? Do you know if Europe, especially, has felt more of that pressure? Because I know there's a lot of concerns about energy and resource acquisition, depending on which country you are, I guess. But
it was actually like based on technical analysis, it was actually sitting in a pretty good place to buy.
okay.
So you can see, I think this was right around when the war started, kind of in this range here, I guess, end of February, right after the Olympics. So it definitely did take a hit. You can see it went down to about $26. It's back up to just about 29.
Mm-hmm.
I would definitely say like that timeline corresponds pretty well to the war, but it seems like market confidence has returned a bit here as well.
Okay. Which line is the 200-day moving average? Is that the
200-day moving average is the purple one, this one. So it's trading below the 200-day.
Okay.
Okay. So it was up. You can see at its peak, it was at about $31. So you can see that definite drop there at the end of February, and it has rebounded. But it is still trading below the average, the 200-day average.
We can quickly talk about it because you've looked into it, but and I think we'll have another video. But so just a really like quick summary. What happens when like the 50-day moving average or whatever day moving average is below or above the 200-day moving average?
Like your averages are supposed to kind of smooth out the highs and lows, right? So the shorter the moving average, the more sensitive it is to the swings. So if your 50-day moving average is below your 200-day move? Did you say below or above?
I said both. Yeah.
Below.
Yeah. If it's
Yeah.
below,
So
what happens?
if the 50 day is below the 200-day, that means like there's some indication that it's trading below kind of what it could be worth.
Mm-hmm.
That the longer moving average is kind of more representative of how it's been over a longer period of time. So if you're below that, it could indicate that it is of value buy,
Yeah.
and
Yeah.
would move back towards that longer average. So yeah, so if we slap a 50-day moving average on here. So yeah, you can see here the 50, we're actually trading above the 50-day average, but below the 200-day moving average here. So yeah, this could indicate that it's trending in a good direction here.
Mm-hmm.
But yeah, that is my couple weeks here. Nothing
Cool.
too eventful, but yeah, down a little bit. Market as a whole kind of down a little bit these past couple weeks, but
Yeah. We're both down a little bit at the end of week 12. But all things considered, not too terrible. We haven't collapsed 30 or 50% like Netflix has, so doing well.
yeah, next week is our quarter mark of the 1 year.
Oh, yes. Yes, that's right. That's right. We'll see you guys in week 14 and we'll check with each other then. See ya.
See you later.